Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is September 25th, 2012. Lots to talk about, so let's get started. First thing I want to show you is the chart of the SPY, which is ETF that tracks the S&P 500. So let me switch my chart over here. Alright, so this is the chart of the SPY and what a move we had today. So, if you watch the weekly video, which I released, I believe, on either Friday or Saturday, we talked about the divergence within Apple, and we also talked about the possible failed or failure of a bullish pattern that the SPY was creating, and that was based off of this shooting star candle here. Okay, in addition to that, I also mentioned that we had this upper trend line here that normally if you break in a upward movement, whether it's a upward wedge pattern or a channel or somewhat of a flag pattern, that the downside will be more than significant, meaning it's going to be a bit more than usual. And I gave an example about that, I believe, on one of the other ETFs. But anyways, to make a long story short, we broke out of this upper trend line here, which is not only unusual, but when it does happen, that normally indicates that it's going to be short-lived, and it is a fake out. Okay, and we pulled back in, and then on Monday, let me just zoom in here. Monday, what we did was we actually broke down. We gapped down from this upper trend line here, and then I honestly thought it was over, and then we were going to hit this 144.30 level here, but we did not do that that day. That day we floated higher, which was fine because we still closed below this top upper trend line here. And again, and like I said in previous videos, as long as you close below this bottom trend line here, that will indicate that the next stop will be 144.30. I honestly did not think that we would get there so soon, so fast, being that the volume is so low, but we've obviously hit there already. We hit there today, and just one day we went from the high of this candle was 146.24 all the way down to 144.06 with a total of a negative of 1.54 down for the SPY. And if you look closely, the 144.30 was a mathematically calculated level, a level that you could potentially go long on, simply because I do believe that the Feds have enough money, and the institutions and banks or whatever have enough money to prop this market higher in case something like this happens. Okay, but first and foremost, what I want to talk about before I get into that is this pattern here, which is in this square that I just drew. A lot of people are calling this an engulfing pattern. That, in my opinion, is not an engulfing pattern. An engulfing pattern has to happen after an up move, okay, or a down move. All right, this. And it has to happen obviously in the opposite direction. This, we already had a down move, and then we have a candle that engulfed the previous day's candle. Yes, that candle did engulf today's candle did engulf Monday's candle. However, it's after a down move here, which is telling me that there is a possibility that we may get a small bounce tomorrow. And normally after a big move, we get normally at least a 25% retrace bounce or retracement the next day. So let's taking a look at this 144.30 level. I'll switch over to the 10-minute chart in a bit, but just on the daily, as you can see, the SPY went right into this 20 moving average. So that indicates a possible bounce. It also cut through this 144.30 level, which also gives it some support as well. This is again the mathematically calculated level. Shortly after that, we have this bottom trend line here, which I would assume is going to have good support as well. So do I expect somewhat of a bounce shortly, if not tomorrow, the next day? And then yeah, I do see a bounce, but I don't think the bounce is going to be long-lived. Okay. I think it's going to be a short-lived bounce, more of a consolidation pattern, if you will, before reaching this 141.95, which is the next mathematically calculated level, before we get a bounce. Right under that too would be the 50 moving average as well. So that's something that we need to keep an eye on. Now, just keep in mind that because we're trading within this pattern here, that we may actually break down from this bottom trend line. I know I've been saying that for a while, and the government or the Feds keep saving it. So learning from my old lessons, that the government or the Feds or whoever may possibly try to save this and bounce it off this trend line if they don't try to already bounce it off tomorrow. Okay, so keep that in mind. Now let's switch to the 10-minute chart. So this is a 10-minute chart. This was the start of the day. These dotted lines here, this was obviously the end of the day. This was today. So essentially when we hit this 144.30 level, again, if you were a day trader and you actually went long on this 144.30 level, you would have made a substantial amount of money right there. So this 144.30 level held up quite beautifully. I really enjoy watching these levels hold up. But then again, once a level is used and abused, you can no longer trust it. We got another bounce here on this candle here, but essentially we broke down, and then we have now closed below the 144.30 level. So what, you know, as we learn how federal manipulation is applied to these markets, we have to be concerned and very much have to be careful with that. Everybody is right now is excited. A lot of bearish people are in the markets. There's also a lot of bullish people in the markets, and they just see this as a pullback. And so there's going to be a lot of buyers entering the market because that's been the trend. The trend has been, on the daily chart at least, it's been up, right? And so whatever pullback, whenever there's a pullback, people like to buy because the trend is going up. So, and everybody, likes to go with the trend. But when the trend is overextended, in my opinion, you can no longer trust the trend, and then you get moves like this. Okay, so let's switch back to the daily one more time. I really like when the charts actually work out the way that we discuss in videos. But in any case, continuing on, if the Fed start manipulating the markets, they could shoot this back higher. What we need to watch out for is this: if they do bounce this back up and it's a substantial bounce, we have to see if it's going to bounce and close above this upper trend line or not. Okay, and of course, volume is a big indication on whether or not that it's going to solidify the actual move if the move actually happens. Okay, so. Another thing to keep in mind that this move here from this top to this bottom pretty much negated the federal announcement of QE3. Okay, the negation is not valid though, in my opinion, because if you notice, we did not close below the low of this candle here. We need to close below the low of this candle here, which means it's twofold. Okay, because we didn't close below the low here, that's actually good to me in my opinion, because if we can tomorrow close below the low of this candle, that will also indicate a close below this candle, which will also validate this down move here. What do I mean by that? Every time we see a big move, I always say, okay, we have to just be patient and make sure we get a close on the next day below the candle of the previous day. And I always say that because that will keep you from getting trapped into bull traps and bear traps, and it'll keep you from getting suckered in, because that's what they want you to do. Right now, all the bears are jumping in. If this is fake, that's what they want. Okay, so we did get some volume on here. It wasn't substantial volume. It wasn't volume like this. So we have to wait and see. This volume wasn't even better or higher than the past 3 days, and my rule is always higher volume, at least for the past 3 days, which this is also telling me that this could also be a way for everybody to get everybody short. Okay, now what was I talking about? Okay, so once we get that confirmation move, which means a close below this candle here, which would probably be a close below this candle here, then this whole move here would be negated, and then I see red in the future, and I do see a potential target of these levels down here before we actually get somewhat of a bounce, because I do believe that the Feds will try to jump in to save the markets, whether it be rumors, whether it be money, whether they would devalue the dollar, which in turn would increase or prop the markets higher. Okay, so that's just basically what I'm talking about right now. So far, if you've been watching my videos, you would have expected something like this to happen, and it's happening now. So I'm grateful to actually see it actually play out. But just fair warning that there is manipulation in the market, so you just have to be aware of that and be careful. Okay, so I wouldn't go short right now, if you're not already short already, because basically because we couldn't close above this upper trend line here, I went short. Okay, we closed below this upper trend line here, which showed me a lot of bearishness. Sure enough, this morning we actually gapped higher, but we just sold off. So if you're not already short now, just wait for a consolidation pattern first, if we do create one, before going short again. And this short would obviously be a counter trend trade, so you wouldn't want to be in the short for a very long time. Okay, so I do think this market still has bullish legs, but I think it's gonna have to come down here in order for it to really have pretty good bullish legs. There is a possibility though, however, and I'm looking way into the future here, that if we do however get into this level here, and that's a big if, okay, only time will tell, I do expect a back test of this bottom trend line here before heading lower. Okay, now again, this is the election year, this is a couple more months before the election happens, so you know, you never can tell what the Feds may do to prop the markets higher. So real quick, let's take a look at the dollar. In my opinion, the dollar tells all, right? We all know that the markets are inverse to the dollar, not penny for penny, but tick for tick. I did mention in the other video, just previous to this one, that the dollar still had legs. It still had room to move, and I didn't see any resistance point until these X's here, and ultimately at this 81.26 level. I doubt it's going to get there, but that's what I also said in the previous video. If we continue to have big moves like this, then yeah, we could get to the 81.26 level in a substantial amount of time, or in a quick amount of time, I should say. But again, like I said, the Feds could just say, you know what, I'm tired of this market's going down, I'm going to devalue the dollar, and then the dollar comes down, and then that props the market higher. However, as far as now, what the markets are saying is the next resistance level is this level here. The 20 moving average is coming down. Let me just kind of delete this here. Yeah, so the 20 moving average is coming down. So if it goes into the 20 moving average, then we should see a bit of a pullback on the dollar here. So if the 20 moving average comes down, the dollar goes right into it. And this is the chart of the dollar futures, by the way. Forgot to mention that. Then we should get a slight pullback there, potentially, which will give the markets a bounce. Okay, so just keep these levels in mind on the US dollar, because the dollar says it all, and right now it's saying that we'll have resistance here. We got the bounce off of the 78.74 level, which that held up very, very good. And again, these are just mathematically calculated levels, so you know, the next stop would be the $80.61 mathematically calculated level, which means it doesn't necessarily mean it's going to get there, because we have this trend line here and we have the 20 moving average, so there's going to be quite a bit of resistance around this area right now. If the dollar can actually break through the 20 and 200, then I expect it to hit the 81.26, which is right at the 50. That's why I don't think it's going to get to the 81.26 level, because it has a lot of resistance levels to break through before it can get there. So just keep in mind that right now it's going to be very tough for the dollar to get past all of this. Not impossible, but just tough. And the point being, if we do have resistance here and it does have a hard time getting through everything, then it's going to have to pull back, and that's going to give the markets a prop higher. So let's take a look at this. If we can get to the $80.61, or let's just say, let's keep it simple because it's not dollar or penny for penny, it's tick for tick. Let's just say the dollar goes into this level here and then starts getting a pullback. About that time, then the SPY should theoretically get into this 141.95 level, and you know, get that bounce that we're looking for, which would be inverse to the dollar. Okay, so anyways, I'm already into 13 minutes, so this will be your 13-minute market update. Thank you very much for stopping by and watching these videos. I hope that you guys are finding these videos useful. God bless you all. Good luck to your trading, and I hope to see you in the next video.